It's Monday, June 21st. This is Street Live. I'm Catherine Ross, and I am, of course, joined by the one and only Jim Cramer. Jim, starting off this trading week, what are you watching in the markets?
Well, it just seems like that there's just a bid underneath the market that erupted. And I'd like to know, where were these buyers last week? And they're buying everything, whether it be J&J, JP Morgan, they're buying Honeywell, they're buying everything that got clobbered. And it's almost as if you start realizing there was some sort of program last week, perhaps related to a rebalancing, because it's across the board buying. It is not anything that is that you can point to, other than the fact that some of the semis are weaker because there was actual research on semis that was negative about Intel. But it is just a roaring recovery. And it is good to see because the decline last week puzzled people. I think the advance is going to make us feel like it was all programmed on the decline. Once the program is over, here's what we get. This market seems much more real.
Now, Jim, in your real money column this morning, you mentioned the momentum in the meme stocks. You mentioned the short-term lifespan of some of these stocks that we've seen, such as Wendy's versus the AMC and GMEs, which are really the only two winners, as you point out, of the Reddit investors so far. So what does this tell you about the staying power of this kind of investment?
Well, I think that clearly reveals that they're not investors. They're just about targeting a couple of shorts. There's the fact that there's no natural sellers from AMC up here in the 60s, rather amazing, given the fact that there's still no real comeback to the theaters. But Adam Aron is fantastic, and if you buy the stock, you get free popcorn, and free popcorn is like free beer. There isn't anyone who doesn't mind free popcorn. But that's the one that hasn't any natural sellers. GameStop, I understand, shouldn't have natural sellers because those people, owners, are waiting to see what Ryan Cohen does. But everything else has been pretty much disastrous. The Corsair being the worst. They pushed Corsair. The insiders were ready, and they shot the buyers. It was kind of like a Valentine's Day massacre, except for happened to be more around Memorial Day. And the Wendy's push was so Bush, it was scary. I mean, they had absolutely nothing other than the fact that they liked the salad, which is really extraordinary to me. I feel that the push on Cleveland Cliffs is going to be ill-fated, given the fact there's no infrastructure bill. But I really do like Cleveland Cliffs. Iron's come down. It really is just a case of they're a two-stock gang, and they're nothing else. I'm looking at BlackBerry, trying to figure out exactly what's going on there. I haven't been able to come up with anything. I'm going to be working on that for the next couple of days. But when you only have two stocks, I question whether you're a movement. They tried, there was this kind of attempt to squeeze Bed Bath & Beyond. I like Bed Bath. It has a 33% short position, which seems unwise given the fact that Mark Tritton's very involved doing a good job. Although I don't think the stock has episode to the 30s, that's one they're trying to squeeze. But, this like the kind of squeezing thing is getting old. And AMC is, if natural sellers came out, or if AMC decided to sell more stock in order to pay down more debt, then that would collapse too. I don't want that to happen. I think Adam Aron's doing a fantastic job. But these guys are not investors. They have two stocks. When they venture out of those two stocks, they have nothing, because they were only just about short busting. The apes were not about doing work. So I salute the apes that they've been able to control two stocks. I wonder whether the government salutes them. I think we'll find out. If the government finds out that there's collusion among buyers, it's entirely possible they could say that should have been registered as a proxy. That would be a very aggressive SEC if they did that. But two stocks. There's a lot of other stocks to look at, but that turned out to be all they were about. And all that diamond hand and the YOLO, just two stocks. So let's focus on other stocks. I'll stay focused on AMC and GameStop at every second. I get up in the morning at 3. I look at where they are, what people are saying. I go to bed at 11. That's because I like to work harder than any ape.
Jim, so
apes are very smart as animals, not as smart as people.
Well, one stock you just mentioned that I want to dive into a little bit more is Cleveland Cliffs, because not only is that a stock that we've seen the Redditors kind of pay attention to, it was also your stop trading this morning. And you tied this into your commentary on China. So for those of you unaware, Cleveland Cliffs is a steel producer. Jim, I want you to break down for our viewers why it's important to be exposed to this kind of space here.
Well, I mean, look, I think Cleveland Cliffs could go either way in the sense that their raw cost is iron, but the problem is that they own a lot of iron. that's, Cleveland-Cliffs was an iron company, and they went and bought two steel companies. They're not going to be a beneficiary of the decline in iron. Nucor, which we own, they use recycled metal for when it comes to the steel they make. But I just feel like if you're a big owner of iron ore and the Chinese government has cracked down on iron, it's very bad for Vale, V-A-L-E. And I question whether the meme stock Cliffs, which they are now down about 10% on, doesn't have more downside. And what I would do is I'd sell Cleveland Cliffs. I like the company, but I'd sell Cleveland Cliffs and I'd buy Nucor. And that's an interesting paired trade. So you're going against the remaining meme people who still may be in the stock and going along with America's finest steel producer. And that's a good idea. I don't know if the apes understand pair trades, but I offer it to them, and maybe I'll write about it so that they have a more education about how to trade stocks.
So let's take this opportunity, Jim, to dive a little bit more into the commodities, because we did see them slump a little bit following the boom that we saw earlier this spring. I mean, there's obviously a lot of drivers and pressures coming from this space, from China demand to stimulus to the more hawkish tone on monetary policy and, of course, inflation. So are commodities important for any investor, especially the apes, to really pay attention to?
Yeah, you have to. I mean, we have a June 30th crop acreage report. Corn has been incredibly hot. Corn started coming down. If it shows that the American planters really went nuts putting up corn because the Chinese have big demand for corn in order to be able to feed the pigs after the African swine fever, if they planted a lot, then corn could plummet and lead to a domino effect. Some of those grains were already going down. By the way, I think that plastic has peaked. I don't expect to see those rates going up anymore. I see a lot of peaking of semiconductors. People feel that Micron has peaked, DRAM, peaking of the demand for things that go into the home for office. And I just think the only thing that has not shown any sign of peaking is freight. As freight continues, that's going to cause inflation, but nowhere near the inflation that people are thinking about.
And of course, Jim, I'd be remiss if I didn't bring up the fact that Prime Day is here. And I'm curious what you're watching on Prime Day, and if you don't mind giving us an update on your thoughts on Amazon stock here.
Well, look, I think that Amazon, there's some people who are saying that maybe Prime, they won't be able to deliver things. The one thing we know about Amazon is they're geniuses at any sort of situation in its infrastructure. They will get it to you. So I'm not that worried about that. I think that Prime Day is more talked about this year than any time I've ever seen. I waited until a lot of us have held back buying things until Prime Day. That is not that is something new. Most people have kind of just said, "Oh, Prime Day, big deal." No, I mean, people are scouring for deals, and I think that the one of the few winners that's come out of COVID that was in COVID is Amazon. Amazon won in COVID. It's winning now. And I think that as the market goes higher today, people will, I think, go to Amazon. I mean, right now, what people really want, just so everyone knows, is they want the banks and the drugs, which is interesting because they tend not to trade together, but that's what they really want.
Well, speaking of banks, Jim, last week I asked you about Jamie Dimon's comments around fintech, JP Morgan CEO. But this morning, your mad dash was PayPal. So I wanted to compare these two again, because I think that the point that you made last week about fintech being so prevalent here is really showing. Well,
I mean, now they can't both go up at once. That's another thing with, and I've addressed the meme people here. One of the things that happens is that when fintech goes up, the actual financials tend to go down. It's almost as if there isn't enough money around to keep both of them. But PayPal did raise rates. PayPal doesn't have the kind of debt worries that a bank would have. They're unregulated, and I think that Jamie Dimon's point that they're unregulated, coupled with the fact that trading was bad for JP Morgan versus what people thought, made it so that JP Morgan actually has come down a lot. I know Jeff Marks and I and Zev, we're all trying to figure out whether this isn't the level to buy JP Morgan. We do have Wells. We had kept back the bank stocks. We felt that they had peaked. So we had sold Goldman and we had sold J.P. Morgan. These turned out to be very prescient sales. Wells is doing well, but Wells has come down. But I think that we said on a call 3 calls ago that we would have to bite the bullet and just go buy PayPal, and I'm glad we did.
Yeah, and Jim, I think that hearing my question out loud, it made me wonder if I was maybe putting them in 2 separate buckets, as if you can't own both of them. But I think that we should address this. Do you think that people should have a fintech such as PayPal and a bank such as J.P. Morgan?
Yeah, sure, absolutely. I know that just because they don't go up all at once, I mean, I often talk about, am I diversified? One of the things that bothers people about diversification is not everything does go up at once, but the flip side is not everything goes down at once. I do think that I like PayPal more than I like J.P. Morgan because J.P. Morgan, for every reason that Jamie Dimon mentioned, which is that JPM is regulated heavily. JPM has certain capital requirements. JPM has certain community requirements. PayPal has none of these. So PayPal has a chance for really incredible gross margins, particularly because they just raised the rates to merchants. So PayPal's a real winner.
And finally, Jim, let's talk a little bit about Fedspeak because we're going to hear a lot of it this week. Now, last week, on Friday on Mad Money, you said that despite the pressure from the market that the market saw following the Fed's comments on interest rates, there were still buying opportunities. So aside from the Fed comments that we expect, what are you also watching this week?
Well, I think that I'm watching Bitcoin. I think that the PRC has spoken. They're cracking down on Bitcoin. And when they say that there shouldn't be as much money on Bitcoin and so much mining, and Bitcoin goes down, isn't that curious? You would think if they limit the amount of mining, it would actually go up. So what this tells me is that there's a considerable number of people who are dumping Bitcoin because they fear the PRC. The PRC, just, I think that their attitude is this. I think they feel that they're not in control of Bitcoin. That billionaires in America are in charge of the price of Bitcoin because you see them come on all the time. Chinese watch our TV closely, they monitor what we say closely. And they don't like the billionaires calling the shots for a second currency in China. They want to have their own currency. So the fact is that Bitcoin did not go up on the mining curtailment, I think, because people are afraid to own Bitcoin in China. Now, let's switch all the way to the United States. I think that the ransomware here is, with Colonial, is really the tip of the iceberg. I think there's a lot of companies that have been paying ransomware. And if that's the case, because there's so many companies that are involved with ransomware, if that's the case, then I think the Federal Reserve and the Treasury is not going to tolerate this, and wouldn't be surprised if they said, "Listen, you can't pay off. You're not allowed to pay. It's basically kidnapping, and you can't pay individual companies." And that would put an end to the way ransomware has made Bitcoin to be far more important. So I'd be very careful with Bitcoin. It's got to hold this 30,000 level. DeMark, which has been just spot on about this, says the 30,000 level could be the buy level. But I do think that it's going to be rocky for Bitcoin for a long time. The fact that the averages are up so strong, again, makes it so people feel like, hey, maybe I should go back and own some stocks. And that, too, is negative for Bitcoin.
All right, and Jim, before I let you go, I did see that you had some exciting news on Twitter. For your Father's Day, you got your own kind of gift that's alive and well.
Yeah, I think it was kind of interesting because it was the gift that everybody wanted, so to speak, which was a new dog, NVIDIA II, also known as Ragu, by the way. It's a rescue dog, part Corgi and part Rottweiler, and it's from Tennessee, where they seem to have a predilection of putting dogs to sleep, or else they all come up in a big truck. And we're gratified, and it looks like so far Marley gets along with NVIDIA II. She certainly got along with NVIDIA the first. And we're watching the two closely. I cannot believe this baby dog, who's like 12 weeks old, slept like a baby. And so far, I think that my instincts are that these two are very mild-mannered dogs and are going to get along quite well. So it was good Father's Day and a nice surprise.
Tim, I'm so glad to hear that. Now I'm going to let you go because you're going to head on over to actionalertsplus.com to join Jeff Mark, Senior Portfolio Analyst, to discuss your moves, including an exit that you made this morning. So I look forward to hearing that.
Absolutely.
You can head on over to actionalertsplus.com for more. I'm Catherine Ross, and we'll see you tomorrow.